Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show. I'm your host, Dan Breslin, and this is episode 113 with John Matheson on fast access to commercial funding. John is a real estate developer by trade from the Northeast United States who specializes in permitting and selling land. He's been party to more than $100 million in real estate deals since getting into the business in the late 80s. During that time, he's become privy to how the banks work when it comes to commercial financing. Commercial financing with a bank, in case you didn't already know, only works when you have the perfect match. That is, the bank that you've presented your deal to just happens to like that specific type of deal you presented. In other words, just because the bank says no doesn't mean you can't get the deal done. Wouldn't it be nice to know whether a bank would be interested in your type of deal before you take the time to meet with them? Instead of guessing and presenting yourself at 9 different banks before finding the right one, wouldn't it be nice to just walk into the 9th bank and get your loan? That's exactly the system that John developed and we're going to talk about here today, in addition to a few stories about some multi-million-dollar land development deals he's done. So let's jump right in, shall we? And welcome to the show, Mr. John Matheson. How are you doing today?
I'm doing great. Thanks for having me.
Cool. So I am recording overlooking Lake Michigan, which is like an ocean here in Chicago. It's a beautiful sunny day, middle of the summer here. Whereabouts are you, and what's your day looking like, John?
Well, I am in central Connecticut, and it puts me right in the middle of just gloomy, overcast conditions today, which is not a typical August day for here. So we're all inside today.
Gotcha. So for any guests, we're going to get into some financing topics here in a few moments. But just so they understand your real estate background, can you talk about how you got into the real estate business, what your real estate business looked like, and then maybe how that kind of transformed over the years into what we're going to start talking about a little later, which will be the commercial financing piece?
Sure. You know, it's funny because when you're a real estate developer like I am, and just probably like everybody in the audience, I started small. Of course, I've got the gray hair now, so when you do this stuff long enough, the numbers get high and you start adding up in tens and hundreds of millions of dollars of transactions that you've been in, and you look back on them and you just laugh because it's just a feature of doing it so long that the numbers are actually higher. But you know, then when you get into software, which we'll talk about, you're a real estate developer and a software developer. How do you craft an effective elevator pitch? You know, it was easy when I was just in development. You would say, oh, we're a sustainable builder consultant and we're now introducing our latest project and that type of thing. But with the software now, I think my wife has it best. She says he's a real estate developer and a software developer, so he's out of my hair all day. So, yeah, I mean, like you asked me, how did I start? I mean, we all start somewhere. One of the things about me is when I was pre-college, I was in residential real estate. I got my license real early as part of a training program for a summer internship. And so I learned the real estate sale part of the business early. But when I graduated school, I went down to New York. I worked on Wall Street for a while. And down there, it was the mid-'80s, so it was classic. I was down there during Reagan. It was just it was just a wonderful Wild West place to be, and decided that I wasn't doing enough to have a tangible effect on my career. And that's when I went back into real estate and actually into building. And I started small. My first transaction was a $30,000 building lot that we bought, and we put a small house on it and we sold it. And then we started to just go bigger from there. And, you know, like all of us, you start with one and then you just click along, and all of a sudden you're into 7 digits and 8 digits. And if you're pragmatic about your growth, you can survive it. But, you know, I mean, like you and other people on the call, I've survived through 3 recessions now in my career. I just as soon not come on your podcast and talk about the skill set to survive a 4th. So hopefully we continue with what's been it's been a real nice run for all of us. But, you know, one of the things you learn early on in the development business, and I I knew I always wanted, when I changed my last time, I always wanted to be the developer. Development really interests me. So I wasn't just a pure investor. I was interested in purchasing something and repositioning or adding value to it to be able to enhance it, to be able to sell it for more or to keep it long term. And you realize that in order for that to happen, you have to have access to fairly priced capital. And, you know, it's funny because today we all run around with interest rates that are in the 3s and 5s. And, you know, when I took my first bank loan for property, the rate was over 10. Could you imagine the reaction of the marketplace today if rates were 10?
It'd be wild.
I know, right? And that's so, but what's interesting is, see, when you learn how to turn a profit at a 10% interest rate climate, it becomes fairly routine to turn a profit when the numbers of financing are lower and your cost of carry is a lot less, as long as you can remember and carry forward those skills. But what I did learn along the way is that you did have to be able to have a legitimate relationship with commercial banks. But, you know, and that's just to level up. I mean, it's just meant to get bigger. You had to understand how to navigate it. You do one and you do another. And what always frustrated me, and I'm sure a lot of people on the call will relate to this, is when you start to talk about banking, and no matter what era we're in, the feeling we all get as developers is somewhere between nervous and absolute dread of the process. Am I right?
Oh, absolutely.
You know, and so you sit there and you say, and none of us feel good about walking into the bank. And, you know, the common thing that we would all do is we'd put together, if we're doing a transaction, whether it's single family where we're going to buy a couple or we're going to buy a multifamily or an apartment building, we're going to go into the bank with a nice little executive summary, some of our own numbers that are in there, a pitch as to why it's a good property for us to be involved in a request for financing. And we're going to meet with the banker, or we're going to digitally deliver it. And we're going to do what? We're going to wait. And we might get a nice call that they've received it, but we could wait 7-10 days before we hear anything from the bank. And, you know, when you're out there risking deposits of due diligence capital and you're trying to determine if you're going to do a reasonable sized deal, the last thing that you need to have in the process not work is your finance. I'm not saying anything that we all don't know about once we get into this space. So one of the things that, you know, I always found about it was the frustrating part with banking is you never really knew. It was unpredictable as to what they would do. And as you get more of a relationship maybe with a bank, you could predict it a little bit more, but you still were never sure if they were going to have a change. And boy, did that ever become clear in the last recession, right? Where when your whatever bank relationships you or I had previous to 2008 looked very different by 2011, didn't they?
Oh, absolutely. Yep.
You know, so you're sitting there and you're looking at the bank world and you're saying, okay, so, you know, things have changed. How do I stay in this? So you've got banks that are no longer lending the way that they used to. I mean, even some of the larger regional banks that were servicing the Northeast, I got a phone call from one of them, so we're just not going to lend into commercial space right now until the smoke clears. Imagine, I mean, there you are. This is banks that you rely on for millions of dollars of capital just decided after the recession that they were going to wait it out. And they did for a couple of years. And so it became a process of, you know, how do you speak to the bank to be able to get what you need? So in my case, like all of us, to just segue into how I got into software, I was in the market looking for a replacement facility on a fairly good sized loan that was coming to maturity. And I was having a hard time placing it because it just wasn't the climate where banks were looking to extend into land and into pre-developed projects. And that's what I had. So I was starting to get nervous because I had never had this problem before. I'd always been able to place all of my stuff. And I ended up getting referred to a banker consultant who ended up as my partner in the software. And when I met Dan, it was classic. Two older guys, and we're in the diner. And I always tell the story. We shouldn't have been in the diner. You know, at our age, we shouldn't be eating sausage and eggs and bacon and breakfast in the morning, right? And he met me, and it was great because we sat down and he had his laptop and he opened it up. He said, all right, John, give me the pro forma numbers on the property. Give me your income and expense. And I did, and he's tapping away, and he tapped for no more than 2 minutes. And he turns the computer around and he says, you're a go. And I said, I'm a go. What do you mean I'm a go? I don't understand. And he goes, I have put your numbers through my software, which vets your deal against common commercial bank guidelines and tells me if you are likely a stop or a go to a credible commercial bank for application. And since you're a go, I'm going to print out the one sheet that comes from the printout of my program, hand it to my bank contacts, and in a few days you'll have an LOI. And that's exactly what happened. But at the time I didn't know that. So I'm staring at him, and as bad of a situation as I felt I was in and needed to solve, my quest for knowledge is changing in that discussion to solving my problem to what does he have in that computer? So I said to him, what do you mean your program? He goes, yeah, I wrote the code. I've been in bank consultancy for some of the biggest banks in the country, and now I do private consultancy. I've done this for 25 years, and I use this program to vet over $1 billion of commercial loans and credit lines. And I said, really? And he said, yeah. And I said, so I'd really like this for my computer. You know, Dan, how do I get this? He goes, well, you can't have it for your computer. It's on mine. It's not something I can't distribute it. It's something I wrote. It's not like it's in a format I can send you. And I was like, oh, okay. And I said, so, you know, but I'm looking at him and I said, do you realize the angst that you solved for somebody like in my seat here who's searching for financing today, unsure of what the terms will be and where it is? And he says, yeah, I hear that all the time. People love this. I said, well, have you ever considered marketing this nationwide to help out all the people I know who are out there who feel the same way? And he said, yeah, I have. I just haven't gotten to it. I don't, have anybody to help me put it into the cloud that I'm capable of talking to about it today. And I said, well, I do. Would you like me to help you with it? He said, yeah. And that's, it was a great day for me because that's where our partnership started in the commercial loan success software. And, to segue into that. So, yeah, right. So to segue to that for you, the long-winded answer to your very simple question, this is how a real estate developer like me, who has always marketed everything like any of us in property, we're all location driven, right? We have something in a particular town or city. That's where we market from. And, it's been quite a really fun experience to branch out and start to digitally market products across the country, to be able to help other people solve the same problems that a lot of us with a lot of experience and perfect credit and no issues in the file run around with every day. And that's somewhere between nervous and complete dread of the commercial bank process. Now I can vet my transaction online in the privacy of my own office before I ever speak to a banker and know if it's likely a stop or a go. And if it's a stop, the software will tell me what's the problem in the transaction. Do I not have enough income? Do I have too much expense? What's the issue that I need to solve to be able to get the loan that completes the transaction or completes the refinance the way I want it? And I have this knowledge before I ever speak to the banker. So now we have people all across the country who will sit there, download, print, and share their one sheet with their banker. And they just send it in and they say, I purchased software that allows me to vet a transaction according to common commercial bank guidelines. Would you like to continue the conversation with me regarding this transaction? And the bankers love it. The bankers love it. The testimonies we get from the bankers are some of the best because, they're out there rejecting on numbers anywhere between, 40 and 60% of all commercial bank applications that come in. And if you talk to the bankers, most of them, they don't like to reject people. They don't build customer relationships that way. They'd rather write the loans, but they find that a lot of people come to them with unrealistic expectations or not properly prepared. And they find a screening tool like this opens the conversation and brings a prepared borrower right to their door so they can assess immediately if they can do the transaction. And that's what Dan had in his computer in his private practice for all those years. And that's, what we now have, which we're having an absolute ball with.
So, John, I run into this problem you're describing on several occasions already. I run intentionally, several million dollars through my business account, none of which of that money is loan proceeds at all. So it's all revenue coming through that account with PNC. And then every time I go in to get any type of line of credit to operate, line of credit against one of my properties that's paid off, it's just a resounding no every time. And I've had this frustrating experience on multiple occasions of walking into these different banks and, I guess I'm blindly groping at the product that they maybe have, going into the problem to be shot down for seasoning issues, to be shot down for whatever it is. Maybe I'm guessing, and I'm outside the industry, but perhaps these banks have specific types of loans, and not all banks specialize in all type of loans. And it would be nice to have a roadmap and figure out if my particular type of financing, whether it's, a line of credit for my business, whether that was I don't know, unsecured line on my own, high income and 800 credit score, or maybe it's a development loan. And like you mentioned, this raw piece of land that you had to find some financing for, some pre-development project stuff, which I know for a fact was near impossible from 2008 to 2011 or 12 to get financed. Is there like a roadmap? Is it true maybe that these banks have a particular loan appetite and that's why I'm getting turned down every time? Am I going to the wrong places with my business maybe?
Well, and this is great because I can answer this for you as the entrepreneur side of my partnership with Dan, and Dan's the commercial banker. And so I'm always falling down on the side of the entrepreneur and feeling your angst and frustration. And all I can do is just to give it context and to answer your question quickly, and then in a fun story type of way. To answer your question, each bank is different, and that's really what's going on, although they all underwrite today with the same criteria. If we're dealing with a cash flow property, not our pre-development land, let's cash flow a deal. They're going to look at three things real quick. They're going to look at our net operating income. They're going to want a capitalized rate. They're going to want an LTV-driven value or an appraisal to get an idea of value. And then they're going to want to know what our debt service coverage ratio is to be able to quickly determine if this is even a conversation they want to have with us. So each bank can interpret their threshold for those three differently, but they're all interpreting at least it that way. When you go for a business credit line, and if you talk to guys that are out there like Ty Crandall at Credit Suite and people who are actually placing credit lines effectively today, what you get is very clear. Each bank is different. And so, I learned this real early in my career. Funny story for me. I'm 21 years old in a conference room, no clue with what's going on. And I'm in my first commercial deal. And back in the day, it was a $350,000 building, which may as well have been an $800,000 building today for today's numbers. And the guy comes in to talk about what you said, seasoning, right? The guy comes in and he's got 20% of the down payment and he's getting 5% of the remaining down payment from his aunt. And his aunt is saying she's not going to sign on the loan. She just doesn't want to, but she'll give him the money. And he discloses all this to the bank. So I've got the banker in the room that everybody in the office said I was supposed to have in the room. And I had an office manager who was great to me, and she would watch everything I did. And we were in one of those offices where you had the cubes with the little 3/4 high wall, and then you had the conference room that was there, so she could hear through the wall. And the banker looks at the deal, and he says to me and the customer, he says, "Wow, everything about this deal is great, except you haven't properly seasoned the down payment. We would need your aunt to sign the loan or we can't do this deal." And before I could even speak, right, the wall erupts, and the wall speaks for me and says to him in just simple words that were very loud for everybody to hear, "At your bank." And, that was my manager yelling through the wall, and she never spoke to me about it the rest of the day. And I looked at Steve, the banker, who I became friends with afterwards, and I said to Steve, "You know what? The talking wall has a point. If I can find another bank to do this deal, you're buying the drinks tomorrow night, and I'm a kid. I can stay out late." And nice. I did. I called around. We didn't have cell phones in the 80s. This was a bang away. And so you learn that as hard as it is, we're entrepreneurs. We're problem solvers, all of us. So if you treat the lender that way, that says no, So PNC or wherever it is says no to you. You know what? At your bank. And you watch the reaction. Suddenly, maybe you're a good client running that kind of capital through the bank. And maybe they don't want to lose that. And suddenly the risk of that flying over to an institution that might be more amenable to you based on a simple introduction that you can make to determine if they want to talk to you going forward becomes, critical. I mean, the statistics and the bankers know it. Over 15% of us in small business change our bank relationship every year. What that tells a banker is if they do nothing in 6 years, there's no more clients. So there's a lot of competition for all of us out there. And if you interview any of them on your show today, they're going to say, oh, no, we're lending. We're lending because they really want to. But they have to fit it into the box at their institution, at their bank. And, business credit line can be as flexible as anything, bank to bank. One bank will do it, another won't. You'll never know why. One will do it and one won't. There's never I can't find any rhyme or reason to it, and I haven't had any bankers give me rhyme or reason to it other than to say it's just particular to our institution how we are underwriting the file at this time.
All right, this is cool. This is going to make for a good roadmap here, and I'm going to circle back around to the software here in a few moments. But I want you to go back and just for entertainment purposes here today, John, can you think back, not the deal that we kind of lightly touched on where, we first met Dan and he was able to put those tools to work, and not the one with the $350,000. But was there a deal that you were losing sleep on early on that just felt like the biggest deal of your life? It was like a door opening up to a new era or a new chapter. Can you remember back to a time like that with a story of how you ended up funding that deal early on when I'm sure it felt like it was near impossible to get done?
Oh, classic. Yeah. So there's several, because you can't be in this business for 30 years and not, feel like you're on a rodeo bull, right? Between market changes and things. But one of the things that when you just said it, just to stay authentic in my thoughts of what you just said and what came up in my mind first. We were in a development where we were buying from the developer by phases. And my dad was a home builder. And I was the developer, and I'd get the lots, and Dad would build the houses. It was fantastic. I mean, how great for me, right? Just to be able to do that was just such a wonderful time in my life to be able to do. And so we were buying lots. He was buying lots in sections. And we get the first phase in, and the road builder is arguing with the developer as things can happen, right? So the second phase is all mud, and it's time to build the road, and they're arguing over payment. And I've talked to the road builder, and I'm pretty comfortable it's going to work itself out, all right? This is set up for a closing. I'm going to tell you the closing was, say, September 7th or 8th. I can't remember, 2001. And we closed on 10 lots to fund the developer, to pay the builder. And I think we paid between cash and bank financing somewhere around $700,000 at that time. Then September 11 came, right? And the towers and all of the tragedy that befell the nation. And there you sit. And you're getting through the personal part of the tragedy for the people who were in the towers and the people that I actually knew from my old days in New York and some very dear friends who were in those towers. And then all of a sudden it hits me on a personal level that I've got a bank loan out for $700,000. Is there even an economy? And, where do you turn? Your trusted advisor. I go to see my CPA, and his eyes are bulging out of his head. And he's like, what are you going to do? I don't think there's going to be any, who's going to buy a house? What are you going to do? And just what you want to hear, right? And the banker calls and says, you're going to have to keep paying the interest. And I said, it hadn't occurred to me that you were going to tell me I didn't have to pay the interest. And there you sit. And it's like, so you're going to try to do an open house in a development and nobody's anywhere. It's just nothing's moving. And the planes aren't flying overhead. And there you sit. You owe $700,000 still on a guarantee to an institution. And what are you going to do? And, we were all very lucky. It just cycled back, right? I mean, we all lived through it. and we were very lucky. But I'll tell you what, we paid a lot of bank interest against no cash flow, as you just adeptly described, coming in from proceeds. There was no flow for a long time from that. And that was scary because, writing a check to the bank to clear that up would have been a strain.
Yeah, I was 21, I guess, during that same time period, and I was in the car business, and I remember the car business seized up, and travel agents were bringing their leased automobiles in, and they're trying to get out of their car payment, and they're going out of business, and everybody all around was having that same feeling. I don't recall the exact timeline. I mean, what would you, if you had to guess now, I don't expect it to be exact, but what was it, 3 months, 6 months? Was it a whole year that, the activity stopped in real estate?
Yeah, no, it wasn't that bad. But, it probably, I'm in the Northeast, so winter sets in, which is normally a downtime for permits between your December, January, February world. So I think we probably returned to a normal activity set by that next March. And I think we were lucky. There was a wonderful subdivision. So we actually were sold out by the end of 2002 in it, which was great. But, you just sit there and realize that, at any moment, if you look at your portfolio as it sits today, are you prepared for everything to come to a complete stop? Because it can. And are you prepared for that? And what will happen when it does? And it's just an interesting thing. You all take a step back and examine your business and you go, oh, no, it's not good if everything stops today. and
yeah,
it becomes
you're right
very
about
sobering
that.
From an analyst standpoint. And, when you start to sanity check your acquisitions and your business going forward, are you in a position to handle those type of situations if all of a sudden you were taken offline for 4 months? What would happen?
So let me ask another question to dig a little deeper into the development thing. That's your base of experience. That's your frame of reference when you approach the commercial banking thing. So when I ask these questions, that's the answer I'm looking for is the one that you would have done, not everybody's answer. And that would be, the sanity check on a deal that's a development. What type of profit percentage in the deal do you have when you are constructing your pro formas and heading into a deal? And does that account for everything stopping? And then the second part of that same question would be, how do the profit percentages actually shake out? Do you guys count on some tailwind in the market? Does everything typically, sell at the pro forma price? I mean, how does the money get made in the development space, John?
Yeah, no, and great set of questions. So back in the old days, if you talk to any of what my dad used to call the gray hairs on the job, and of course it's funny because now I'm that, and I just don't feel like it, but I guess I am. But what they would all tell us is take a cocktail napkin or an envelope, and your deal needs to work on that. Right. And I don't know if you've ever heard that saying, but all of the professional developers that I ever learned from, JV'd with as a kid and studied, always had just a little scratch pad to make a deal work on. And the way they did it was simple. They would sit there and they would build in at least a 25% profit line for them. And they would say 25% for the land with their infrastructure in, 50% for the construction, and they want 25% for them. Now, these are just rough numbers. These aren't actually real, numbers that any of us could ever hit. But these are numbers that were used, and this is how I learned, to just simply vet a deal. So the cleanest sanity check that I would ever give you on any kind of development that we would do is I'd be running simple numbers like that. It's a $20 million deal. I've got to get my land done for 5. I've got to build it for 10. There better be 5 in it for me. If there's not, I've got to really look at what I'm doing to make sure I understand the risks, and do I have winds built in from all directions? Even sideways is no good in development. I mean, you don't want to be in a spot where you're a developer and you open up a new road or you open up a new complex and you're just happy if the birds fly in to see you on an open house weekend. That's just not good. So I'm always going to build that stuff in. And I think what happens is when you build in those kind of margins, And to answer your second question, you rarely ever hit them, right? I mean, if you were actually turning those kind of numbers, you're just, perfection every time. But it leaves you enough room to make plenty. And, I remember one guy telling me once when we were doing development in single family space, he's telling me how he bought a lot from me and he built a house and he only made, quote, $35,000 on the house. And he felt he should have made 75. And he said to me, if I go into a bar and I sit on a bar stool and I turn to the guy next to me and say, I only made $35,000 on this house, the guy will probably knock me right off the bar stool. And he goes, but you understand all the risk I took and everything I went through. And I said, I do. I totally do. And, and then of course he felt he overpaid for the land. So I looked at the formula that I just gave you with him. And I said, so if you paid me and you'd done this, your problem was you undersold your asset for the amount of extras you gave the buyer. And, he ended up buying more from me. And it was just so, if you build in those kind of margins in development, you're going to pass on a lot of transactions. One of the things that the people who bring me transactions always complain to me about is I pass on too many things. But, when you're vetting deals through a sanity check and you say, I don't need to get bigger for the sake of getting bigger, Dan. I just have to be big enough to fulfill the needs that I want to have and, have a rounded life for me, right? So how big does my business really need to get? Sometimes the less you do, the more profitable you can be. And, everybody's different. What are your income goals for your business? Where do you want to be? So once you know what that number is, you know how many deals you have to take. But sometimes the ones that you pass on were the ones that you were the smartest on.
Yeah, I personally do somewhere in the neighborhood of 40 to 50 deals, single family existing. There's very rarely land, and I don't do new construction. And I've always looked at new construction, almost like a greener pasture type of situation. And we're very successful here at Diamond Equity Investments, and we're blessed to do the kind of volumes we do. And that's why I'll look at the greener pasture. So to do 40 deals or 50 deals and find somewhere that a piece of land could be built all in one instead of I'm spread through Philadelphia, Chicago, Miami, Atlanta, Tampa. For those 50 deals, it's a very far distance. It's tough to get some scale on those. So I always look at the new construction, and I'm not doing it, so I don't know the construction costs. I don't have the financing structure. I do have the napkin formula you just described when I look at deals, and every time I would look at those deals, I would take the pass, and I wouldn't even attempt to put the deal together to find the people to build the properties out or do any of that further because they did not pass to that, to vet the deal at 25% or so profit. That's generally what we look for as a fix and flip investor. 70% of the ARV minus 3 pairs gives us what we need to buy the property for. And most of the land, quite frankly, is just too expensive for us to go past any further. And I see some of those same pieces of property bought by people that I'd expect are going to do a 10% profit maybe, and they're counting on the upwind of the market, to push their – I just don't think that the numbers make sense. But to hear you tell the story, I guess passing on most of the deals and only – taking the cream of the crop is probably the way to stay safe, especially when we have the 2001, the 9/11, or the 2008 when the bank decides not to give us the next construction draw and everything seizes up. I mean, that's how you're still here to tell the story, right, John?
You're right. And, the thing about home building, you all want to do what you're good at. We all want to have a skill set, and what we're not good at, we partner with. And I know you've heard this before from other guests, and it's so true. And to be a home builder and actually turn a profit is an amazing skill. It's not for me. There's no way I can organize that many subcontractors and feel as though I've got myself geared properly for margins and then stay sane enough to go out and do what I do for the business all day. And hiring people to do that can be risky. So the actual home builder that can turn a profit, that person is very, very, very good at what they do. And when I was younger, you talk about when we start younger, when I was deciding whether I should, go home build or I should develop, I had a developer who was very prominent in the locations I'm in say to me, he said, he had a beautiful road in, and I went to actually see him to see if I could buy a lot to put a spec house up. And he started laughing, and he said, he goes, and I said to him, why don't you build? And he says, I could sell my lots to you and make $1 million on that property. Or I could go build myself the property and lose $1 million. So which lot do you want? He said to me, which lot do you want? And I looked at him, and I didn't buy a lot. I was like, you know what? I'm going to take that to heart. And I started to talk to a few more developers, and you realize, like you just said, land is scarce, especially approved land. So those of us in the land space are saying, hey, our approved asset, like a piece of art, it's got value there that doesn't exist because there's not that much of it anymore. So yeah, we're going to get a premium because the cost of the permitting was high. And for the builder, what's left is a thinner margin that if they have enough finesse, they'll make. And if they don't, it's not a good day.
Gotcha. So what markets over your career, maybe even now, did you or do you develop in, John?
So we're in the Northeast predominantly. I wanted to stay around where I was when I had 3 children growing up, and I didn't want to travel a lot. So we've done things in Florida. We've bounced around to other places, but our prominent base was in the Northeast. So we're in that Connecticut, Massachusetts, New Hampshire marketplace, and we're pretty available through there right now to do any kind of permitting. Our market's been good here. I mean, we get up into the Boston corridor, and through there's more than enough work for all of us to do now.
Yeah, and that's interesting because the Connecticut, Massachusetts, New Hampshire, all that's going to be constrained markets, a little more difficult generally when viewed on a national level to permit. And the scarcity of the land there is definitely high. But you talk about Florida or, the Atlanta, Georgia market where I am, and the land is cheap. And I am not experienced, but I'm told by other developers there that the permitting process is a little quicker and it's a little easier to build out, and there's more land that's buildable available, but maybe not profitably building and selling and having population go there, right?
Yeah, I mean, we all talk about it up here in the Northeast. Where the acronym is we're NIMBY states, and NIMBY standing for not in my backyard. And in your developer skill set is looking at a property. I have a 4 to 5 page intake form now for due diligence that we use that always, started out as a 2-pager, and it just keeps growing over time. And one of the things on it is, has anybody talked to the neighbors? And before you were even going to go into a permitting phase on a reasonable sized development, you have to survey the neighbors, because the neighbors are the ones that can end up appealing you. And, the enemy of the developer is timing.
Best deal you ever did, John?
Oh, man. There's some fun ones out there. Okay. So one of my favorite deals was we had a piece of land that we had picked up from an estate that was in a residential zone. In one of the towns in Connecticut, I had the town planner come up to us and ask if we could do an active adult community on the property. It's just fun days when this stuff happens. So we actually had a piece of land that was for $300,000 upon acquisition that we were expecting to get 5 lots on. And we worked with the town to change the zone. And when we changed the zone and we went for the permitting, we were able to get 142 units on the property.
Whoa.
So needless to say, we could add a 0 to the 300 when we sold the property. So it was a very, very good day to change zoning regulations and then change the use of the property and then consolidate the permit into what was 140 units from 5. Favorite deal by far.
Nice. I assume that would sell to one builder then, and he would build that. That was 100.
And he's done now. He got 6 different awards on the property, and it just was a win-win-win all the way around. Yep.
That's pretty cool. So what do you look for right now, 2018? What kind of investments? Are you still on the hunt for land, for developments, or do you do something different to invest your money these days, John?
Yeah, no, anything we can permit. We're a permitting company now, specializing in anything that we can get permitted. So we'll look for today any pad that we can get cash flowing assets on and immediately, move toward an approval and get that building constructed. And then we will consider staying part of the transaction as a JV partner. And, you end up where as a business model, you permit 6 of them and you stay 1/6 in each one, and all of a sudden you own one outright. So he who has inventory always has ruled in these markets. So we're heavy on the ground, always looking for caliber real estate that we can change from what it is into something more consolidated. We love the sustainable element to building. We market ourselves that way. We're big into anything that we can do that can make a property more sustainable long term with less impact on the environment. We'll market that way. We're just in the type of market here now where, just like you are down where you are, it's picked up. It's over the last 2 years, the amount of work activity that we have is tripled.
Do you expect the good times to continue? What's your prediction on the stability of the market? What are you expecting and preparing for, if anything?
Well, we've been here before, right? I remember in 2006 sitting around and saying, it just seems to me that it's kind of weird that people are getting these type of loans to buy property from banks that are out of state on a 1-page commitment letter. And something felt funny. And, this one doesn't feel weird to me yet, but I'm a little concerned that there's an adjustment that could happen in the stock market at some point, based on some of the valuations that are there that could just trickle into our world and put some brakes on. But I think that where our industry is positioned now, I think we've got a real good run here still for quite a few years to come.
Yeah, I have a tendency to agree. We have a demand with the millennials coming up, and we could do a whole nother episode, I'm sure, on that. But I think that we have strong underlying demographics to certainly keep us stable, maybe not, skyrocketing in price like we saw over the last year or two, but certainly stable. So cool. Hey, John, for me, for anybody, maybe in the development space, if there is such a thing, would you have any book recommendations that I could, or maybe if somebody passed you along the way that were kind of instrumental in developing your mindset and success in the development space?
It's funny. Somewhere along the way, as a kid, somebody handed me Think and Grow Rich. And I couldn't tell you what's in the whole book, but I remember reading most of it. And I'm one of those readers that when I read something, I'm looking for the golden nugget within, and once I get it, I just move on. I'm
nice.
Like a guy looking at directions. Once I'm looking for the name of the road, I'm good. I don't look at the whole map. So I remember going through that book, and the stuff that resonated with me was the part where if you surround yourself with experts at something you're not. And so when I formed my development business, I hired the engineering firm. I didn't vertically integrate and put the engineer in my office. I hired the other business owner that runs the engineering firm and made the deal to work directly with them. And I always have surrounded myself with a team that was capable on their own of functioning at a high level without me being there every day. And that's just my model for running a development business. And today, part of that discussion is the technology piece that we had, where, we're going to use different types of computer modeling, and we're going to use things like commercial loan success to manage our bank relationships. The next book that I like is, and it's a newer book, and it's written by a guy named Chris Voss, who was an FBI hostage negotiator, called Never Split the Difference. And it's a book for negotiating. And, when you're out there buying properties, it's a cool book because you can apply a lot of the things that are in it to negotiating your deals. And when you start using some of the techniques to elicit responses from the other side, you would be amazed at what happens, and you're able to easily make the deal. And it's just the coolest thing. So I would recommend that book for anybody who's, on their own, not through an agent, but on their own, sitting down with sellers and negotiating, or, sitting down with a buyer as the seller and negotiating for themselves. It's good stuff.
Yeah, absolutely. It's one of the highest recommended in my personal mastermind with my team, and one of the most, I'd say, consistently consumed on repeat would be Never Split the Difference. I mean, some of the language, some of the things that, that's talked about, if that can saturate your subconscious mind, you are going to operate better in business, whether that's real estate or in Chris Voss' situation, saving people's lives from terrorists who don't really want to negotiate or are not willing to negotiate. So that's a great one. Both of them actually great recommendations there. So, hey, John, if you could go back in time, you were very young to get into the business with some of the stuff you shared here today on the show. But I don't know if you could go back and share with your 18 or 21 or 25-year-old self the crown jewel of wisdom when it was most important. What would that be?
That's always such a great question. And I guess it depends on your age. When you get to be my age, there's so many different decades in your life that you're going to look back on. And, somewhere along the way, when you get into this property business, right, Dan, you work every day and you're working weekends and you're doing stuff. And, I would be telling myself in my late 20s to early 30s when I first started to have my kids, I would be saying, spend more time with your family because you can. You don't have to work as much as you think you have to get to where you want to be, because we spend so much time in our businesses. And then you look back when everybody's fully grown and you say, what did I miss because I was doing X, Y, Z on a Saturday or a Sunday? So that would be, that. Now that's not what I would tell my 18-year-old self. My 18-year-old self, I'd say, keep moving. Do not get complacent. Rejection is part of life at that age. 22, you're going to get kicked around. No one's going to give you any credit for being anything other than 22. Keep moving. Yeah.
True enough. I couldn't agree more with the family thing. I'm 38 now. I was 35. My daughter moved to Chicago from Philly, where I grew up originally, back in, 2004, 2005, when me and her mother went our separate ways. And moving to Chicago and having the opportunity to spend this time with my daughter, I hear people say that the kind of stuff about their teenagers, and you hear my daughter's 16 now. Oh my God, that's such a horrible age. But, my daughter went to camp this weekend and she came back. I picked her up and she was telling me about the story. She was telling one of her friends, oh yeah, I really miss my dad. And she was saying that while she was at camp, and oh yeah, my dad's my favorite. And she's saying those kind of things. And I do take the time to spend with her. It's great to be here now finally and not have to hop on a plane to visit my daughter like it was for so many years. And it was funny too, John. My business exploded when I moved to Chicago. That's the reason I went to another market. Between that and Atlanta, there are top markets now. I never would have met the guy who runs the Atlanta market if I didn't move. And I did that all. It was a family first decision for me. So yeah, what a great crown jewel of wisdom for sure to, spend the time with our family while we can. Someday she'll go off to college and she'll be, out of the house and on, and I'll be here having plenty of time to spend with the business still. But appreciate that one.
Sure.
You talked about the software early on. I think you have some information if anyone wants to get in contact with you or maybe check that out and get some more information. Did you want to share that with the audience, John?
Yeah. So what we do is, as the bankers have said to me, who wouldn't want to know if their deal qualifies before they apply, right? So what we do is anybody who will listen to me yak for as long as we have today, I always put together something free to consume that's easy to do. So we've got a book coming out. We'll have it out in the beginning of October, and it's called Commercial Loan Success, as you would think. And it's just, simply how to fund your business using lender financing. And we have chapter 2 of the book, which is our deepest dive for preparation, to where we list out in a checklist form all the things we think you should do before you even begin discussion with a banker about a transaction. So we give you that for free. And then at the end of that, there's a link to our software where there's a nice demo and a discount. And that is at web.commercialloansuccess.com/diamonds for today's podcast. So web.commercialloansuccess.com/diamond.
All right. And I will put that in the show notes as well. Taking some notes here. Great. John, I appreciate you. We're at the top of the hour here, the end of our episode and time together today. I appreciate you blocking out this time, all the distractions. I know you're busy just like me and our listeners here on the show. So I appreciate that you took the time to be here, and I appreciate all the stories and all the knowledge here that you shared today.
Oh, well, thanks for having me on. It's been fun.
And thank you for listening to this episode of the REI Diamond Show. If you're interested in a pre-release of the next episode, that is before the email goes out on Saturday, usually Friday afternoon or Friday night, you can subscribe on YouTube or one of the podcasting apps, including iTunes, Google Play, or Stitcher. If you have certain questions or topics you'd like discussed on a future episode, or if you have a guest suggestion, somebody that you might like to hear me interview on the show, you can contact me directly by clicking on the Contact Dan link at reidiamonds.com. I do personally monitor and reply to everyone there. At that site, you can also check out profitable real estate deals I have available and the entire back archive of the REI Diamond Show, totaling more than 112 episodes. Accredited investors are already earning double-digit returns passively in real estate. Are you? You can sign up to receive private mortgage investment opportunities via email by going to superchargedreturns.com. I am personally always buying houses, so I am always looking for deals. If you have a fix and flip deal available right now in either Chicago, Philadelphia, Atlanta, Tampa, or Miami, please send me the details by email or by using the contact link at reidiamonds.com. If you go to that site as well, you can get my book for free, the 165-page PDF version of Become a Wholesale Real Estate Master. Just enter your email at reidiamonds.com. Thanks again for tuning in to the REI Diamond Show. Dan Breslin here, signing off.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.